What is up, everybody, and welcome back to my YouTube channel. In today's video I am going to be discussing order blocks. Now, I typically do not use order blocks for entries in any of my trades because I feel there's a lot that I need to be looking out for. So I would rather use fair value gaps. Are much simpler and easier to spot on charts. I don't have to second guess or really think about them. But for those that find it difficult to use fair value gaps, you might want to use order block. So I'm going to try and explain how you could use an order block for your entries when it comes to trading. Okay, so the definition of an order block is what everybody else would define it on YouTube, except I will be adding a twist to that. So in a bullish scenario, the last bearish candle before a big bullish move, you would consider that your order block. And in a bearish scenario, your last bullish candle before a big bearish move, you would consider that as your order block. But these order blocks will only happen in POI, so points of interest. So these points of interest could either be a fair value gap within another order block or after a liquidity sweep. As you can see on chart right now, I have an example of an order block. So an order block would either be a series of candles, they're usually 3 or 2, or one large candlestick. So how would you validate or invalidate an order block? Just like we said on the fair value gap, if you have a candlestick close above the 50% of the series of candles or the single candle, then that order block is invalid. We want to see candles close below that 50% of the order block for us to validate it. How do we confirm that this is indeed an order block? We would want a candlestick, like after we sweep liquidity, we would want a candlestick to close above the body of our suspecting order block like this, therefore confirming this as an order block. And we draw our line for entry at the body of the candlestick. So if you are going to be taking any orders, you would put your limit orders right here and you would wait for the market to tag you in, and then you could look for further sells. Where would you place your stop losses? For order blocks, I would say place your stop loss at the previous swing. You could place it at the body of the last candle here, the third one of the order block as well, but usually when you place it there, usually gets stopped out even though the trade isn't invalid. Okay, so I've given you an example of a series of candles to make an order block tapped into a fair value gap. Let me give you, for a single candle it would look something like this. Would get a liquidity sweep above but still maintain or still within this fair value gap, or the 50% of a fair value gaps, which makes this a valid fair value gap. We haven't invalidated it. A close below the body of suspecting order block, which is this one. So a close below here would confirm that that is indeed our order block. And any price action pullback, you would place your limit order here and you would wait for price to come back into this area and push to the downside. You could also use the 50% of an order block for an entry, but if you're going to do that, there is a high chance that you might miss a trade. But typically you'd want to do that if the candlestick that is your suspecting order block is very large. So you'd want to do that to try and improve your risk to reward on your trades. Now let me explain what an order block would look like being formed of another order block. So as you can see, we have these candles here. This candle here I wouldn't consider an order block because it does not touch this previous order block up here, but this one does touch into this previous order block. So I would put my entry at the body of that. My stop loss could be here. If there was another swing high, you could make it higher, maybe there, or 50% of this order block, or you could just place it at this order block right there, just to be safe, to give the market room to breathe. And just like the other one, to validate this order block, you would want to close below the body of the order block. Okay, so that's what this looks like as a textbook example. I hope I have made it clear and as simple as possible. Now let's go through some chart examples. We'll be using EU like I usually do. I'll move to the larger time frames. I need to turn this off just to keep the charts clean. So right here we do have an order block on the 1 hour right here. So I will pick the body right here, then I'll draw it out. So if you are going to get a trade or a sell off of that order block, your limit order would be on this line, your stop loss would be either at the body there or the wick there. But notice how all these candles closed below the 50% of this order block. And notice how this order block has tapped into a fair value gap. Okay, where else do we have an order block? We have an order block right here. These candlesticks, the series there, I would consider that an order block, but I would also consider this 3 candlesticks here an order block as well. So I would place at the body of the order block right here. Boom. And then draw it out like that. You would want your entry right at that line. This order block is being verified by the fact that we have a fair value gap here, and we do tap into this old order block right there. Okay, so notice how we get tapped into the trade, but we do not go anywhere near the 50% of that order block, and then we fall. Where else could we possibly have an order block? I would consider this right here an order block because we tapped into a fair value gap. So where would I put my entry? Possibly I would put it right at the body of that fair value gap and draw it out like that. We get tapped in and we do not close anywhere near the 50% of that, and we fall. Where else could I have an order block? All these right here. This is an order block right there. We have an order block. If you're going to trade it from there, you'd put it right there, draw it out. That's your entry. You see nothing closed above the 50% here, and price fell. Okay, if you're on the 1 hour and you're going to look for another block on the 5-minute, let me try and do that. Like I said, I don't really be using order blocks for my entries. I usually just use them to know that they might cause interference in my trading. Alright, there we go. Oops, I didn't draw that out. Okay, so that's a 1 hour fair value gap. Let's move to the 5-minute. We're going to be looking for another block within that 1 hour fair value gap. Okay, so this right here, I would draw at the body, would be a fair value gap because we have a sweep of these lows. I would consider that an order block, but then again, I am also looking at this area here as well. I would consider these 2 candlesticks as another block, as we do tap into a fair value gap, or we're in a fair value gap. So I'd consider this. I would rather use this order block because it minimizes my risk. And as you can see, the candlestick here closes above that body, then we get a pullback into the 50% of this order block, and then we have the market push to the upside. Alright, with that being said, I hope I made order blocks as simple and easy to understand as possible. And if you didn't understand it and you need more help understanding, just leave a comment and I will try and make it easier, or try and find a simpler way of explaining an order block. With that being said, thank you for watching. Please remember to leave a like, comment and subscribe to my YouTube channel, and I will see you in my next one.